earlier on we got a perspective in terms of monetary policy trends in West Africa. Let's get the view in East Africa, where inflation has really knocked the confidence of a lot of central banks. Rufus Mwanyasi is an equities researcher at Tsavo Securities. He's standing by. Rufus, thanks so much for your time. The CBR, the interest rate is generally 18%. Inflation starting to come within that range, but it's not enough for the central bank to make a decision either way.
Sure. Well, the market consensus is the double-digit inflation is way too high, and we'd expect that the central bank governor to at least maintain or hold the interest rate at those levels of about 18%. Well, if unless we see an improvement, particularly on the food inflation side, I think you'd want to perhaps the market would want to have the interest rates remain at that level until that situation is solved. However, there's the other issue about the lending side. We're seeing the lending rates are way too high. Actually, the base lending rate right now is about 20%. And that's way too high for the common guy, right. And I think we'd see the central bank governor actually for maybe in the next 12 months to keep those rates right. not way too high for a long time, because the economy is really suffering. So perhaps he may want to reduce those right. rates to the lower teens of about 13–14%, right. perhaps in the next 6 or 8 months, so that at least there's a bit of ease for the economy.
Right. Let's throw forward, and authorities generally believe that inflation will ease further, and that probably we could see single-digit inflation near the end of the year. So with that being a more optimistic outlook for inflation, how would that influence the central bank's decision in the next few MPCs?
Well, I have a different view, because I think inflation, the data that came out today, we saw that the food component of the index, or the whole basket, that accounts for about 36% of the index prices. We saw it's still, we didn't see quite an improvement there, like in the sense that we saw like a drop in the prices. So despite the fact that we saw good rains in the last quarter of last year, and you know, with the exchange rate, you know, easing a bit to about 85 from 107 high in last October, which has helped particularly with the food import inflation. But I think I'm kind of a bit pessimistic, I would say. Perhaps the best we can see is about inflation coming down to maybe 10, but in my view, in the lower teens of 13–14%. So the view that the central bank governor holds is really just to, you know, psychologically have an effect on the market to kind of, you know, start being optimistic and all that. But I think when you look at the data, it doesn't really point towards that view.
You spoke about the strain that the ordinary Kenyan is feeling, and there is a need, for instance, to make sure that the shilling gives a little bit of purchasing power, and that started to happen because all the interventions with raising interest rates, with mopping up liquidity or excess liquidity in the system has brought us a shilling that's looking a lot better at 84 shillings thereabouts. So that should lend some respite.
Well, of course, it's a big improvement, particularly when you compare the last 3 months. In last October, when you saw a high of 107. Well, of course, 85 is better, but my view is we'd want to go back to the historical band of 75–80, because that's where we've been trading at for the last 10 years. So I would see for the governor to have a good balance that we've all enjoyed, between a good balance between the guys who are exporting and guys who are importing. I think he might want just to to see that range come. I mean the rate come down to about those levels.
Right. East Africa, and we're told that inflation has risen across the region. It's been a function of food inflation. Most countries are net importers, and the currencies, the various shillings, have been very, very weak across the region. What would central bank governors in the region need to do?
Well, I think most governors actually they're facing quite huge challenges, particularly dealing with the exchange rates. And when you're looking at what is happening in the economies, the real problem with most East African problem is, first of all, as you said, we are net importers. So I think the real problem should be solved first. And in my view, which is just to get the import-export balance right, sort of to reduce the balance of trade and kind of to bring it back to the positive side, positive side. Unless that is done, then I think some of these measures that are being taken are just, sort of cosmetic in a way.
Right.
So in a way to deal, long term with the problem, I think they have to look at those, fundamental challenges that face East Africans as economies, and just to to solve that problem, then we might see an ease, particularly with the inflation side, because we spend a lot of money importing a lot of stuff.